Hey guys, welcome back to the channel. I get that it's been a massive while since I did a video, but I'm back in the game now. I'm back from my job and I'm here to present you fantastic stock opportunities. With that in mind, today we're talking about Sofi Technologies, a company that I'm super excited about. I did a video on it a few months ago, and at the moment this company is bargain basement, the opportunity of a lifetime to get in on a company that is right at the beginning of its growth cycle. So today we're talking about Sofi, we're conducting stock analysis, and I'm going to go through with you exactly why I'm just as excited as I am and why this stock is one of the biggest positions in my portfolio. Hey guys, welcome into the video. So here we are on the landing page for Sofi Technologies, and we can see that the share price has taken an absolute hammering over the last 3 months from $23.29 down to the bargain basement price that is $14.27, and it's taken a hammering along with the rest of the fintech sector. The likes of PayPal and Square have all been hammered by an exit of investors from the sector without any massive major reason for it from the major key players that these companies are highly profitable, high growth companies, and Sofi is right at the beginning of its growth trajectory, and we're going to get into the reasons why for that in a few seconds down the line. As we can see, the share price at the moment is $14.68. That is a bargain in my opinion. So if we go onto the Sofi website, we can see that it has an ecosystem of products. So it offers invest, personal loans, student financing, money, home loans, credit cards, student finance, insurance, credit score, and auto car loan financing, which is absolutely fantastic. It has 2.5 million members already. It's only been going, especially been de-SPACed over the last year or so. It's a fantastic opportunity, guys, and they're aiming to be a one-stop shop for all your finances, so you can do everything through this company and through its app. As you can see here, a really nice picture there, and what they're trying to get you to do is sign up with just one thing, sign up with just one option that they provide. So if you've got a personal loan or you're going to invest with them, and then what they want to do is get you to get involved with all of these, and it's very easy to do. As a millennial investor, as somebody that does online banking, it is super easy to do this, and it's just offers, it's essentially building return customer. It's basically another return customer without actually having another customer. They just get into another product and another product and another product, and it's far less expensive for Sofi to get hold of you if you're already using that app. Another piece of really good news for the company is it completed its warrants, raised another 95 million in total cash there, generated from the exchanging the last of its warrants from its de-SPACing process. There is a H series warrants that remain outstanding, but they're not affected by this redemption of the warrants, and the company now has no other warrants outstanding. As you can see here, no public warrants or private warrants are outstanding apart from the H series. So that is also good news. The stock is not going to get not diluted anymore, but there's not going to be extra stocks going onto the market from people that were early investors in the company. So if we go into the Q3 earnings presentation, there is so much to be excited about in this presentation. How the stock has taken a hammering with the rest of the sector, I really don't know, because as you can see here, the year-on-year growth through of adding members, they added nearly 400,000 members in the last quarter. That is absolutely huge, and an absolute fantastic amount of people to be starting to use its products. Every person and every member that uses one product is a mini cash cow for Sofi. If they start using 4, 5, 6, 7 or more products in the same app, then that is extra money for Sofi off the same person, guys. That is what is most impressive about this. So here we can see here another 108% year-on-year growth to 4.3 million products being used by 2.2 million members. Galileo accounts are also on the up, 80% year-on-year growth there. Everything, every chart in this company just screams massive opportunity. It just beats every single quarter, year-on-year, over and over and over again. You just look at it and it's just beating last year. You just think, why aren't people taking advantage of this? The $14, 11 billion $14 share price, $11 billion market cap is an absolute steal for this company. This company in 5 or 10 years time could easily, when it penetrates even further into the banking individuals over in the United States, could easily get a $100 billion market cap. That is no joke. If you look at the likes of JP Morgan Chase, Bank of America, these companies have huge market caps. These banks have huge market caps, and if this company can get the bank charter, which it is looking to get hold of as well, that is another massive catalyst for this company. As you can see, quarterly adjusted net revenue up again to 277 million. Quarterly adjusted EBITDA also performing okay. So the EBITDA right at the moment in this growth part of the company isn't as important as it will be 5 or 10 years down the line. It is important, it's great to see that the company is making a profit, but also they're going to be reinvesting an awful lot of that money straight back into growing the company even more. And if you just look at the sort of revenue this company is now turning over, in 2020 $621 million was made. It has already absolutely smashed that, and there's still another quarter to go at 9. So they turned over so far this year $912 million, which is absolutely exceptional. And you can see that the annual adjusted EBITDA is now 37 million rather than being negative, so the profit is starting to be made. You can also see right here what it was expecting and what it actually achieved in revenue, and it achieved an earnings beat. Absolutely smashed it once again. And yet, how did the market respond? Went down. Absolutely ridiculous. I can't find a reason why you would not invest in this company at this stage. The price is an absolute steal. So looking here, we have a revenue for Q4 of 272 million to a high of 282 million. They're expecting to beat this guidance essentially. So if you look here, they're now expecting to deliver over $1 billion in revenue for the year, up from their previous expectation of 980 million. So that is a good earnings beat, not just for a couple of quarters, but for the whole year as well, which is a massive thumbs up from me. Exactly why I'm in on this company, and I'm in pretty big as well. So if you look back over its previous performance, you can see that it's just quarter beat after quarter beat. Every single quarter, looking back on the previous, is better. 2018 year end, 650 million members. 2019, 976. Now it's 1,000, sorry. Now it's 1.8 million for 2020, and it is only getting better there. Sorry, that was members, not in millions there. 976 million would be absolutely huge. That is 1,000. I do apologise for misspeaking there. If you look at the segments, all of them tend to do far better than the others so far. I mean, if you just look there for student loan side of things, the whole of 2020 was 4.9, and now the year to date is 3.8 with another quarter to go. There is so much to look at with this company, and it's absolutely fantastic to see. You very rarely see a company performing as well as this, but suffering the valuation that it has suffered. These are the rest of the financial accounts right here. I can't read absolutely everything to you, but do feel free to spool through. It still has an awful lot of cash and cash equivalents available to fund further growth, getting the advertising out there and producing further products and gaining further acquisitions. So also, if we now skip on to the actual analyst, what the analysts think of this company, you can see that there is 5, so from a month ago and from currently, there is 5 that initiated a buy rating against the company, 1 that was overweight, and 2 that say a hold, no underweight and no sell. And the price target is a high of $30, a low of 19, an average of 25, and the current price is $14.27. That is with the average price presentation, or getting the high, which $30 I think is very, even at that price would still be very undervalued for this company where it could be, as long as it keeps developing on its current trajectory, which we know from as far as we can tell so far it absolutely is. And that is a 100% return on your investment, and it could even go more than that. I'm holding this one for years and years and years, because I can really see it penetrating massively into the banking sector. These analysts that are covering the stock is Credit Suisse, Jefferies, Keefe, Bruyette and Woods, Mizuho, Morgan Stanley, Oppenheimer and Co, and Rosenblatt Securities, and then there's their actual names there, but I'll let you read them yourselves. And just to show you the trend that we're looking at here, this is an article that I found, the disruptive trends and companies transforming digital banking services in 2021. And if we just read the article, you can see the link up there on Insider Intelligence. You can see that the market penetration is gaining more and more popularity for the online presence, and this is the trajectory towards 2025, as you can see. So millennials are already doing this, doing all their banking through one place, one app, online, and there is more and more of the more adult population, the older age population, doing exactly the same as well. You don't need to go into a branch anymore to do your banking, essentially, and to take out loans and to take out student finance and investing and do crypto and all that. And SoFi is offering all of this. It's absolutely incredible, and it is massively appealing to Gen Z as well. And we all know that the children, Gen Z, millennials, they are the future, and if they're going to use these apps for the entirety of their lives, that is a significant amount of revenue that SoFi will garner. We can see here that the digital banking industry trends is massively increasing, so the potential of the population using digital banking is on the increase, and the normal the neo bank account holders there, as you can see, is going up and up and up. It's just absolutely incredible, and you can see this is over in the US, Monzo, and in the UK, and Coho. All of these companies are digital users and offering essentially banking as a software service. That is exactly what SoFi does, and that is exactly the future of this company, and I believe the future of banking. So there we have it, guys. I can't speak higher of SoFi Technologies stock. I really can't. $14 share price, $11 billion market cap. Absolutely small fry for a banking sector app, especially with the sort of trajectory that this company is on, the revenue that it's now garnering, and it is just starting to turn over and make a profit as well. We're right at the very bottom of what is potentially a hugely steep trajectory for this company. I can easily see it tripling, quadrupling, and even more than that over the next few years or so. That is why I intend to hold on to this company for a minimum of 5 years, maybe longer, and just sit on all the wealth that this company and all the growth that it is going to provide. Absolute recommend from me, guys. Thank you very much for watching the video today, guys. If you could see your way to smashing that like button and subscribing to the channel, that would be absolutely amazing. I'll see you in another investing episode. Catch you later.